Have you ever heard of a stock so hot it seemed to defy gravity, only to come crashing back down to earth? Today, we're diving into the dramatic story of Golden MV Holdings, one of the frothiest stocks in the Philippines, and its spectacular nosedive that has everyone talking. It all started on November 18, 2025. At 5:52 a.m. UTC, a storm was brewing in the Philippine stock market. The property developer, Golden MV Holdings, had been on an unbelievable run. For context, this company is part of a larger business empire, controlled by one of the country's wealthiest families. Their portfolio is vast, spanning everything from real estate and retail to telecommunications. But the story of Golden MV is particularly wild. Over the past few years, its stock price had skyrocketed, turning it into one of the most valuable companies on the local exchange. We're talking about a surge that was almost mythical. A real get-rich-quick story for those who got in early. This incredible ascent made its founder billions, at least on paper, and positioned the company as a titan of the industry. Investors were buzzing, analysts were puzzled, and the market watched in awe. But what goes up must come down, and in this case, it came down hard. For 6 months, trading on Golden MV stock was suspended by regulators. This kind of halt usually happens when there are concerns about market manipulation, unusual price volatility, or a lack of public information. The regulators needed time to investigate what was behind the stock's meteoric rise. Was it genuine growth, or was something else at play? The suspension put everything on pause, leaving investors in limbo and the market holding its breath. Then came the moment of truth. On Thursday, the trading suspension was lifted, the floodgates opened, and what followed was pure chaos. The stock immediately began to plummet. It was like a dam breaking. All the pent-up selling pressure from the past 6 months was unleashed in a single, brutal wave. The price fell and it kept falling. Thursday was a bloodbath, and the carnage continued right through to the following Tuesday morning. Within days, the stock had plunged by a staggering 76%. Let that sink in. A 76% drop in just a few trading sessions. This wasn't just a bad week. It was the worst streak the company had ever experienced since going public. The market was in shock. All the paper gains that had been built up over months and years vanished in a flash. The fallout was immense. The founder, whose fortune was largely tied to the company's stock, saw more than $16 billion of personal wealth evaporate. That's a life-changing amount of money for anyone, even a billionaire. This wasn't just a financial loss. It was a massive blow to the reputation and prestige of one of the country's most powerful business figures. So, what caused this epic collapse? The lifting of the trading suspension was the trigger. But the underlying reasons are more complex. Many analysts point to the stock's insane valuation. Before the crash, its price-to-earnings ratio was astronomical, far beyond what its actual business performance could justify. It was trading at a level that suggested it was a revolutionary tech company, not a traditional property developer. This disconnect between price and reality created a bubble, and all bubbles eventually pop. The 6-month trading halt gave investors a long time to think. They had a chance to reassess the company's fundamentals without the noise of daily market fluctuations. When trading resumed, many decided it was time to cash out, fearing the stock was wildly overvalued. This rush for the exits created a domino effect. As the price fell, more investors panicked and sold, pushing the price down even further. This entire episode raises serious questions. How did the stock get so high in the first place? Were there market forces at play that artificially inflated the price? The incredible run-up and the sudden, violent crash have put a spotlight on the company and the broader market. Regulators are likely to continue their scrutiny, and the investment community is now trying to make sense of what just happened. The story of Golden MV Holdings is a powerful cautionary tale. It's a reminder that stock market hype can be incredibly seductive, but it can also be incredibly dangerous. When a stock's price detaches from its fundamental value, a correction is often inevitable. For the investors who got caught in this nosedive, it's a painful lesson. For the rest of us, it's a fascinating case study in market psychology, hype, and the brutal reality of financial gravity. What do you think? Was this a classic bubble, or is there more to the story? Let me know your thoughts in the comments below. Thanks for watching. And if you found this interesting, make sure to like and subscribe for more deep dives into the world of finance. See you next time.